Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, November the 30th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We do have quite a bit of economic data to go over today, so let's get on with it. Not a whole lot across the pond, but in Europe we did get CPI flash CPI, I should say, estimates came in line with expectations at 0.6%. And we also had Draghi speaking earlier this morning. Not a whole lot of movement off of that data point. But here in the United States, we got a ton of things coming out. We had ADP non-farm payroll showed an increase of about 150, almost 160,000 jobs hired there. Now, that was a catalyst to help the market boost to the upside. But for the most part, we have to remember that this is holiday season. Could be a lot of jobs being, or a lot of people coming off the unemployment line and getting hired into more seasonal jobs. So that number can be really a little bit off. It's really a devil in the details, if you will. So just keep that in mind. A lot of people looking for full-time work, getting part-time work, or even just seasonal work is not really that good for the overall economy. Then we also got, here in the United States, we got core PCE price index, which is personal consumption expenditures, came in line with expectations. Then we also got personal income, was nice. It actually moved up a little bit, came in at 0.6%, was expected to be 0.4%. The drawback to that was personal spending came in at 0.3%, was expected 0.5%. So although people are starting to see more income, they still are holding tight at the apron strings and not letting go of that money very quickly. Then we also got Chicago PMI, really surprised to the upside, came in at 57.6, was expected to be 52.1. So that was a big move to the upside and really helped the market boost a little bit higher. The other side of the coin was we had pending home sales came in at 0.1%, was expected to be 0.3%. And then we just got out the crude oil inventories was a drawdown of 0.9 million barrels, was expected to be a build of 0.7 million barrels. On top of that, we also had the OPEC meeting. But before I get into that, mortgage rates also was the lowest level since, I think it was January. The volume fell by 9.4% versus the previous week. So the increase in interest rates is really starting to make people sit on the sidelines and not really jumping towards buying a home. Then we also had OPEC, which had their meeting, big meeting going on, and they actually agreed to a pullback in production. So a lot of people thought that crude oil was going to go to $60 a barrel. Keep in mind that with that move, we came up and tested that $50 a barrel and kind of fell away from it as soon as we got up close to there. One thing to keep in mind is this is just talk at this point. OPEC was going to be the one to take the biggest cut to allow people like Iran and a couple other countries to produce a little bit more than what their previous quotas were. So Iran also agreed to a production limit of just over 3.7 million barrels, just under 4 million barrels per day. So OPEC making big moves over there, and at this point it is only talk. They haven't really seen any production cuts at this point. So that's really the thing to look for, is are they actually going to limit their production going forward? They say they are, but we've seen this time and time again where they all sit down, have lunch, have wine, and then not follow through with what they said they were going to. So on to the overall markets. As you can see, with Crude oil just blasting higher, $48.50, up over $3, $3.30 almost right now, and has since pulled back since some of that euphoria. Then on to gold, with the overall markets pushing higher, bonds coming off, gold suffering as well, down 11 points on the day. Still above this little doji here that is going to be the key to stay above if you are a bull. The other thing to note is I meant to note this yesterday. We did have this cross of the 50 and the 200-day moving average, which signals a bearish trend going forward. So gold is not out of the woods yet. Then on to the bonds. As you can see here, bonds were down or are down over 2 points right now as we speak, off the lows of the day, but it did make a new 52-week low. So we also had a couple Fed governors speaking today. One said that he sees that a rate hike is in the very near future. With this economic data points that we've been seeing, that very well could be true. Maybe they'll be looking at the mortgage applications and things of that nature. We still need to have that economy start to move. We're not really firing on all cylinders, so it's not necessarily a thing that they have to do. It's a thing that they really are doing to kind of make their jobs worthwhile, I guess, at this point. But we'll have to see whether or not they do it in December and try and crimp some holiday spending, which I don't think is a good idea, obviously, if you've watched any of my daily market commentaries. Then on to the Dow Jones. With the equities, we have a little bit of a mixed bag here. We've got the Dow Jones up over 60 points and making a lifetime high. We basically opened at a lifetime high for the most part, have since come off just a little bit, but Dow Jones solidly at this point above the 1900 level, the new high 19,225. So on to the Nasdaq. Nasdaq is the flip side of all of this. Nasdaq is the one where I was talking about it. We have a bit of a mixed bag with the overall equities. Still seeing some pull out of the tech sector and into blue chips and the small caps. But as you can see, with the Nasdaq being the one that is down on the day, down 26 points, we'll have to see if it pulls the broader market down as well. Onto the mini S&Ps, only up a couple of points now after being up quite nicely. They were up to 2213, so we are down about 6-7 points off of that high of the morning. This is the breakdown 15-minute chart of the E-mini S&Ps. This is when we started getting that oil news that the OPEC was really starting to look like they were going to come up with some sanctions and limit productions. The overall market celebrated that for some reason. High gas prices is not necessarily indicative of a stronger economy, you guys. So I'm not really sure why lately the equities rally off of news of production cuts and higher oil prices. That really hurts the economy. But at the end of the day, then we got the ISM numbers, the PMI numbers out of Chicago and some of those other data points, and really allowed it to blast higher. I tweeted out earlier this morning, the fact that we are at these highs, the equities or the markets probably will start to realize that means a Fed hike is imminent. If all of these numbers are coming out good, with markets at all-time highs, that would be a good time, one would think, to raise rates to limit some of that euphoria. And since then, the overall markets have come off quite a bit, with like the E-mini S&Ps, the Nasdaq, and even the Dow coming off of its highs. On to what I've done for the day with TLT. You saw that bond market being down 2 points. I have on an iron butterfly in there, and I put this on for the iron butterfly webinar that we just recently did. So I decided to take that on the my computer kind of seemed to freeze up there for a second, but anyway, I had on this iron butterfly and TLT, and basically I had on the 117 puts and then sold the 122 puts and the 122 calls, and then defined that risk by buying the 127 calls. So created an iron butterfly out of that. I originally collected $3.12. I was actually trying all day yesterday, not really knowing what was going to happen today, but didn't think that we were going to have these type of moves today. But it was very close to a third the width, or the third of my credit. So that's usually where I look to cover these iron butterflies. I talk about that in the webinar at the price point that I like to cover those, because with an iron butterfly, it takes a long time to decay. You have to take it almost all the way into the last couple of days before you start really seeing that decay, because when you're playing with the at the money strikes, those just don't decay as fast as the one that are deep out of the money. So I was looking to cover that yesterday. Of course, today we have that big move in the bonds, which started testing my break even. I just decided to pull the ripcord on it and covered those that Dees butterfly for $3.08. So scratch for all intended purposes, a slight win, if you will, maybe. But at the end of the day, I just decided to cover that before it went into negative territory, and cover it for a win and just get out of it. Played the probabilities, and was working quite nicely for quite some time. As you can see, when I put that trade on, it really was hanging tight to where I was, came up almost right to my mid strike of those 122s yesterday, so it was looking really good. But today just fell out of bed and decided to cover that one. So check out ProTraderStrategies.com, because Friday's webinar is going to be a really good one. Now that we're past most of the earnings, probably 90% of the earnings, this is a great time to start setting up for the next earnings cycle. And what we can do is we can put on diagonal spreads, and those get us set up for the next earnings cycle. So this is the real time to put these diagonals on. I'm going to go through all my rules as to how to set these up. It's the perfect time to do this. This is one of the best times, the times that I generally will start implementing diagonals, is to get ready for those earnings seasons. All right, so go to ProTraderStrategies.com, sign up for that, and I'll go through all the rules and as to why I'm setting these up that way. All right, if you can't take that, take it easy.